Hello everyone. Today is day one of the Road to 200K series. In this series, we're given 100,000 US dollars to invest into TradingView's stock market simulator. We have a 2-year time frame, and our goal is to double our money and have a portfolio worth 200,000 US dollars by July of 2028. Historically, the S&P 500 has returned about 10% per year on average over the long term, so doubling our money in 2 years is a very ambitious goal. Each video will present a detailed investment thesis, explaining why the featured stock is a compelling buy with a 2-year investment horizon. At the end of every video, or on the next day when the market opens, we will execute the trade through TradingView to put the thesis into action. For our first stock of the series, we will be investing in Microsoft. As one of the world's largest tech companies, Microsoft continues to shape the future through AI, cloud computing, and its wide range of products used by billions of people worldwide. Today, we will break down why Microsoft is a strong investment for a 2-year time horizon. Before we look at Microsoft, let's quickly understand the portfolio. We are keeping 80% of our money in cash for now. This gives us the flexibility to invest in other stocks later on in the series. The remaining 20% will go into Microsoft because I believe it offers one of the best combinations of high potential returns and relatively low risk. One reason Microsoft is so strong is because it doesn't rely on just one business. It has many diversified revenue streams. The first of the three is cloud and AI. Azure is Microsoft's cloud computing platform. Cloud computing means businesses rent computing power and storage over the internet instead of buying expensive servers themselves. Companies all over the world use Azure because it's cheaper, more flexible, and more reliable. On top of that, Microsoft has Copilot, which is its AI assistant built into many products. Second is productivity. Products like Microsoft Word, Excel, PowerPoint, Outlook, Teams, and LinkedIn are used by hundreds of millions of people every day. Businesses depend on these tools to operate, providing a very stable revenue stream. Third is personal computing. Windows remains the world's most popular operating system for computers, and Xbox gives Microsoft another source of revenue through gaming. Because Microsoft earns money from so many different industries, if one part of the business slows down, the other continues generating profits. That makes the company much more stable than businesses that rely on only one product. Primary growth catalysts. Now let's talk about why Microsoft could grow even faster over the next 2 years. The first catalyst is AI. A catalyst is simply something that helps a company grow faster. Microsoft has integrated Copilot into almost every major product it sells. Instead of just selling Word or Excel, it can now charge customers extra free AI features that save employees time. If millions of businesses buy these AI subscriptions, Microsoft profits could increase dramatically, boosting the stock price. Second is Azure. More companies are moving from physical servers inside their buildings to cloud services. This trend has been happening for years and it's still growing rapidly. Every company that moves to Azure creates more long-term revenue for Microsoft and will help boost the stock price. Finally, Microsoft benefits from something called a subscription flywheel. Instead of customers buying software once every few years, they now pay monthly or yearly subscriptions for Microsoft 365. Since businesses rely on these programs every day, they rarely cancel. That gives Microsoft predictable income every single month. Microsoft's economic moat. Warren Buffett, one of the world's greatest investors, often talks about companies having an economic moat. Think of a castle surrounded by water. The bigger the moat, that means more water, which makes it more difficult for enemies to attack. In business, an economic moat is anything that makes it hard for competitors to steal customers. Microsoft has 3 major moats. First are switching costs. Imagine a company with 20,000 employees using Microsoft every day. Switching to a completely new system would require retraining everyone, moving years of files, and changing thousands of workflows. That costs time and millions of dollars, so most companies will be likely to stick to Microsoft. Second are network effects. The more people who use products like Teams or LinkedIn, the more valuable those products become. If everyone in your company uses Teams, it's much easier to keep using Teams than switch somewhere else. Third is brand trust. Businesses trust Microsoft because it has provided reliable software for decades. When companies are making billion-dollar technology decisions, they usually choose companies they already trust. Microsoft is one of the most well-established businesses in the entire world. These competitive advantages make Microsoft's business very difficult to copy, and thus its economic moat is very wide. Microsoft's financial health. Even great ideas don't matter if a company doesn't have strong finances. Fortunately, Microsoft is financially one of the strongest companies in the world. Its revenue has continued growing year after year. Revenue simply means all the money a company brings in from selling its products and services. Microsoft also generates massive operating cash flow. Cash flow is the actual cash coming into the business after normal operations. That cash allows Microsoft to invest billions into AI research, build more data centers, and even buy back its own stock. Profit margins also remain high. A profit margin tells us how much money a company keeps after paying its expenses. Higher margins usually mean a stronger business. Finally, Microsoft has a very healthy balance sheet with lots of cash and relatively low debt. That means it can continue investing even during economic downturns. Now, let's look at the potential return. According to Wall Street analysts, Microsoft's average price target is around $560 compared to its current price of $400. This suggests roughly 39% upside over the next year. Of course, price targets aren't guarantees. While these are Wall Street analysts, they can absolutely be wrong. But what's important is why they expect higher prices. Many analysts believe the market is still underestimating how much money Microsoft could make from AI infrastructure and Copilot subscriptions over the next 2 years. If Microsoft's AI investments continue paying off, today's price could end up looking relatively cheap. Risk and final recommendation. No matter the investment, it'll always have a risk. Some key risks of investing in Microsoft is that 1. AI adoption could happen more slowly than expected. This would stunt financial growth and in turn hurt the stock price. Another risk is that competitive pressure from Amazon and or Google could increase, and this would mean Microsoft would lose some market share, which would hurt this financial growth and which would hurt the stock price. Third is that Microsoft is also spending billions building AI infrastructure, and those investments may take more time than expected to generate profits. This would mean that in the next year, the stock price could remain stagnant or even decrease, and it would be highly volatile. Volatility is expected. However, I believe these risks are greatly outweighed by Microsoft's strengths. The company has one of the strongest competitive advantages in the world, multiple reliable revenue streams, outstanding financial health, and enormous opportunities in AI and cloud computing. My 2 year investment thesis is that Microsoft isn't just participating in the AI revolution, it is helping build the infrastructure that powers it. Businesses already rely on Microsoft every day, and AI gives Microsoft a way to earn even more from the same customers while continuing to attract new ones. It is also a really good anchor because it is very financially sound, so it allows us to invest in more risky companies later on in the series. Because of that combination of stability, recurring revenue, and long term growth, I believe Microsoft is one of the best large cap investments for the next 2 years. Like and subscribe if you enjoyed this video. Thank you.